If you want to make a lot of money trading cryptocurrency, you need to understand this one thing, and that's probabilities. Why does the casino always win? Because it's the house and the edge is in its favor. And if you can understand this, not only will you make more money, you have a lot more peace of mind. So if you like today's video, like, subscribe, hit the bell notification. Let's dive into the probabilities of crypto and making money like a casino. When thinking about probabilities, die and dice is one of the easiest ways because you got a chance of 1 out of 6 of getting it right. So what are the three outcomes when you're trading? There's win, there's lose, and there's the draw. And that's what we're going to break down today. And this is going to blow you away because if you can get this in your head, you know that with a die, 1 out of 6 is your probability of getting it right. With a coin, when you're tossing a coin, well, it's 1 out of 2. If you're selecting a bag of marbles and you're able to pick 4 out of the 5, well, you got a 4 out of 5 chance. And our job is to really get the edge in our favor. So we're going to use momentum, pattern price, and time. And that's one of the reasons why I created the trend identifier. Because if you can trade in the direction of the trend, because the trend is your friend, right until its end, until it reaches its bend, all of a sudden the probability of you winning goes up. The odds of you becoming a better casino goes up, and the house always wins. And the way we've created this is the weekly and the daily trend. When they're pointing in the same direction, it says consider buying. When they're pointing in opposite directions, a strong bull but a bear on the daily, it says stand aside. That one thing just is an absolute game changer. And if you want to check it out, you can now try it for £1, 30 days. If you like it, it's £9.97 thereafter. It's my 15 years of trading experience that I've put into that in itself. Now, with myself, I'm actually a math teacher, as in I used to be a math teacher, got a degree in mathematics, and we're going to really hone in on some practical probabilities. So when it comes to trading, again, 3 outcomes, right? Win, lose, or draw. And there's going to be different ratios. When you win, do you win at a big level or a small level? We're going to break that down. Lose, do you lose your entire amount that you've risked, or have you got money management skills in play where you're reducing the risk as the trade unfolds? And then there's a draw, break even, risk free. That's a great place to be as well. So we want to look at that. So I've written out 3 ratios, right? 3 ratios: 4 out of 10 win rate, 4 out of 10 lose rate, and 2 out of 10 draw rate. And that's the numbers we're going to use today. Now you can tweak these. You can have a higher win rate, a lower win rate, but it's really to know that it's a probabilities game. When we see the edge, it's like we're tossing a coin. When we're choosing heads or tails, we have no way of knowing in advance if it's going to be heads or tails. All we know is we've got a 50-50 chance. And the odds, if the odds of winning when you win, if it's a 2-to-1 ratio, then all of a sudden we can take that bet all day long. So let's look at winning. Now I'm going to give 3 scenarios. Risk reward, let's just say you risk 2% of your entire account size. So if you've got a $10,000 account and you're risking 2%, you're risking $200 to find out if you're right. Now I've just put in 3 scenarios. 1x, in other words, you risk 2% to make 2%, or you're risking $200 to make $200. So some see that as a 100% gain in terms of risk reward. A 3x, so 3 times risk reward in terms of you're risking $200 to make $600. If you got a $100,000 account and you're risking $2,000, which is 2%, you're risking $2,000 to make $6,000. That's a 3x, and a win rate of 5x. You know, they happen. We're going to call it at 1 out of 10. So the probabilities we're going to state in this example, and it is an example for indicative purposes, is 1 out of 10, we'll get a 5x. 1 out of 10, we'll get a 3x. And 2 out of 10, we'll get a 1x. And I'll put some numbers together. We're going to make it really, really practical. So the second one is a draw, right? A draw. 2 out of 10. What does a draw mean? Well, it means you place your trade and you've managed your position. Let's just say you've entered the trade and the market moves in your direction, and then you move your stop loss to your entry point, and then the market reverses and stops you out. You make no money, you lose no money, so it's a draw. It's even, it's break even, so you're risk free. And here we're stating that it's 2 out of 10. Could be higher, could be lower, but for indicative purposes. To really get the probability of an understanding of becoming a casino when it comes to trading. You're in the business of probabilities. You're in the business of becoming the casino and then getting consistent. And then when you lose, right, we put that as a 4 out of 10, 40% lose rate. And 2 out of 10 of those is a 1x. In other words, you're risking 2% and you lose 2%, right? You risk your full amount of your allocation, your money management account, and you're losing that amount. And then 0.5x. Why did I put 0.5x? Well, it's really when you've managed your position. So you might not be able to move it to risk-free, but the market's moved in your direction and it's made a new swing low, and you just moved your stop loss closer to entry, and it could be half the risk at that point, and then it turns around and stops you out. So that's what that means, right? So these are the three scenarios that we're going to play out. Three types of wins, draw is a draw, and then two types of losses. But before we go into that, what I realized is the reason why trading is so difficult, simple but not easy, is emotions, the unconscious, the thought process, the feeling of getting it wrong and losing money. That's when the emotions kicking, the fear and greed. What we're aiming to do as a casino is to become a mechanical, objective, statistics based. We toss a coin, 50% chance of getting it right and 50% chance of getting it wrong. You have to be a fool to think you're going to toss a coin 100 times and get it correct 100 times. It's going to average out to around 50%. And that's what we're going to see in this example. So what I want to get across here is every trade, yesterday's trade and today's trade, are independent from one another. So I just pulled up this example. So independent events are events where the outcome of one event does not affect the outcome of the other event. So an example, tossing a coin and rolling a number cube or a dice are independent events. You toss the coin, it becomes heads. And then when you're tossing the coin again, it's still 50-50. It doesn't matter what the previous event was. Same as rolling the die. If it was a 2, the next roll is independent, right? And that's true for trading. Whether your last trade was a massive win, you could have 10 wins in a row. The next one is independent from the last 10. You could have 5 losses in a row. Lose 2%, lose 2%, lose 1%, lose 2%, lose 2%. The next trade is independent from the former 5, from the former 10. So it's independent. Now, this is so important. So important. Why? Because if you do take 3 losses in a row, how are you feeling? Are you going to second guess your strategy when it comes, or are you going to just go, look, it's 50%, heads or tails, the setup is there. So the professional trader takes the trade. So you want to have a business plan, a trade plan, and trade that plan. Now, independent events, let's just quickly talk about dependent events, right? So we know the disparity, the difference between the two. So dependent events are where 2 events are dependent if the outcome of the first event affects the outcome of the second event. That's not the case in trading. So here, there's an example of if you take out a marble out of the jar and don't put it back in, that will change the probability of the next pick of the marble. Why? Because there's less inside the pool. Whereas when you're trading, it's independent, independent, independent. Really, really important. So what we're going to do next is going to be very cool. I've been working all morning on this. I've put together this spreadsheet. So if you're in my private Telegram community, you're going to get access to this as well. When you take the dashboard, it's a £1 trial. It's absolutely phenomenal, but it's to get that edge in your favor, a higher probability in your favor. I'm going to post this in my private Telegram group, So this is what we're going to go into next. I'm going to do a practical example. What I was basically creating here, or aiming to create here, is a mini casino, right? And this is how it's going to work. We're going to have a random generator here, a number generator here, and it gives us a number between 1 and 10, right? It's going to be random. We're going to have an account size, our starting account to run our casino business. But we are the casino, not the gambler, right? Our casino business, the trading business, the probability business. How much are we going to risk per trade? And whatever number shows here, we are going to choose that number. So let's say number 2 chooses or unfolds. We will select that number. That's a win. And what I've put here as a multiple is what we said at the beginning. There's a 1x, a 1x, a 3x, a 5x. Now, when you download this yourself, you can tweak it as you see fit. A draw means 0. You don't win, you don't lose. And then the lose is if you hit a 7 or an 8, you lose minus 1x. So we risk 2% and you'll lose 2%. And a 9 or a 10 will lose half, as in 1% or 0.5% or 0.1 of the actual amount, right? Makes sense? And then at the end, what we're going to have is a total, right? We're going to have a win rate, and then as a percentage, a draw rate, and also the lose rate. And then we'll have a total P&L, and we'll break it down, per trade as a percentage, but then all together, cumulative. We'll add it all together and see what is the end number. Now, I don't know what's going to come out. I was playing with this morning, and we'll see how it unfolds. And we'll see, does it average out to be 4, 2, and 4 in terms of that's what we've stated in the probabilities. So let's now check it out. So I'm going to pull it up the spreadsheet. There we go. Here's the live version, right? So what we're going to do is when I press enter, the number will change. And I'm just gonna plug in the numbers. You just put in the number 1, whatever number gets selected, right? So let's start with, I'm gonna do this here. Boom. All right, so 5. So we've got 5. The first trade is a draw, right? We made no money, we lost no money. The next number is a 9. So we took a loss of minus 0.5. In other words, we lost 1%. So we're $100 down and we're 1% down. But now we've got a 1 in the next one. So we've got a nice win. It was a nice 1x win. 198. And by the way, I've created it so it compounds. So it basically takes your starting amount plus what's in your account as it unfolds. So now we're up. Now we're up $98, up 1%. Nothing to write home about. Number 8, we took another loss. 2% in total. Got a 10, another loss. We got 8. We're now in a nice losing streak, right? And the people go, oh, it's not comfortable. But we're the casino. We're just playing the next edge and the next edge and the next edge. All right, we got a 6, which is a draw, as in break even. We got an 8. And we got a 9. We got a 1. We got a 6. We got a 4. Oh, we got a nice win here. Nice win. That's a 5x. Now, when you're trading, you don't know which ones are going to be big winners, which ones are going to be losers. You just get the edge and you play the edge. That's what your job is to identify the edge and trade it consistently without hesitation or reservation. And then 9, we took another loss. 2, we got a 1x win. 4, we got another 5x win. 9. And I'm just going to quickly update my spreadsheet here. I just want to, let's just quickly, I want to just do this. I just need to update the view. You can see the hash. This is what I was playing with this morning. Let me just put in the headings, and I just want to open this up slightly so we can see what that number is. And we're going to do a longer example of this as well. I just want to quickly do this here because I want to spend a bit of time on this, because this is so important to get your mind around. Because if you can get your head around what I'm showing you, it's going to be an absolute game changer for you. Absolute game changer, because you're going to be starting to think like a businessman or a woman. You're going to be much more professional in the way that you're doing things. So let me now just get rid of this. Let me just clean this up. That's what I was working on this morning. I just want to just clean this up. Bear with me. This will be worth the wait. Let's just hide that. Bang. All right. So the results of our first 15 trades is, let's just look at the numbers. Let's just do a breakdown of our first 15 trades in this scenario. We had 5 wins, which was 31%. We had 3 draws, which was 19%. And then we had 8 losses, which we had 50%. Our total account is up 15%, even though half of our trades were a loss. So a total profit of 1,491 with a starting account size of 10 grand. That is the business of trading. That's how you become a casino, right? And if you can trade without the emotion, because we had a losing streak, right? And it wouldn't have been nice. We had literally 1, 2, 3, or the losing streak. We had 3 in a row over here. We had 2 in a row over here. That's never comfortable. But we didn't know 1, 2, 3 trades later, we had a nice 5x, right? Nice 10% added to our account. Very healthy. 3 trades later, another 5x. But this could have been the 5x. We don't know. And there is no way of knowing. Someone that tells you there's a way of knowing, there isn't. That's why you have to be consistent. So now what we're going to do, I'm going to finish on this. I'm going to do a longer version of this. We're going to do 100 trades. We're going to do it pretty much quick fire round. We'll do a slightly larger account size. Let's put it as, what should we put it as? Let's put it as 50,000, right? We won't go too excessive. $50,000. We'll keep the risk as 2%, and we'll just go for it. So we'll do it relatively fast. So we got a 3. So we took a nice win on our first trade. An 8. We got a 1x loss on our second trade. A 1x win on our next trade. A really nice win on our fourth trade. And then 2 in a row. 3 in a row. Is that right? Okay, yeah, 4 in a row. Jeez, I was seeing that's unusual. That's very unusual. But we'll take it, man, because sometimes it's going to get hot hands, but it's independent. We literally had 1, 2, 3, 4, 4 5Xs in a row. I mean, wow, that would be like your account size is 50% up. But we'll just go with it, right? We don't have control over this. These are random numbers being generated. Then we took a loss, and we got another 5x. So we're doing incredibly well here. 3, we took another loss. 3, 5, we took a draw, a break-even trade. Half 1% loss, another loss, another loss, another loss. So a nice losing streak there. 4 in a row, losing streak there. Then a nice break-even. And then we had a nice 3x win. And again, I'm just going to keep going through this right the way down to 100 because we're going to average these out because it's good to see the sample size. Because again, one of the reasons trading is so difficult is because of human emotion. It's the emotions that get in the way. Fear and greed gets in the way. Double guessing your strategy gets in the way. That's where people lose because this is not easy to do when it's your real money. Because if you take 2 losses in a row, all of a sudden, a lot of people do double guess themselves. And that's just why most people fail at the business of trading. All right, so we're a nice losing streak over here. But imagine you could trade like this, where you just go, all right, next trade, next setup, boom, stopped out, lost, boom, next, stopped out, next trade, bam, 5x, great, happy days, next trade. Do you second guess the next one? No, because they're independent events. Remember that, independent events. All right, so now we've got a 7. What's a 7? A loss. We got a 9. Oh, let me make sure I get this 9. 9. We got a 1. So a nice 1x win. We got a 9. So another loss and loss. We got a nice draw. We got a nice 3x there. Another 3x. 3x, 3 threes in a row. We like those days. We like those weeks. But it is what it is, right? We're human after all. Nice 5x. That would have been a fantastic week. Just an absolute fantastic week. And if we look at this logically, like let's just say you're doing a handful of trades a week. Here, this would have been a really big down week, right? Down week. Probably a down month, right? Is that going to affect your strategy? Well, for most amateurs, it would because they will stop trading or they will just second guess their strategy. But check what happened like the following month. Just a really nice winning streak. But again, it's all independent events. Okay, so we got 4. We got another 4. We got a 6, which is a draw. It's a break even. Whoop, that's a 6 there. We got another draw. And then we got a nice 1% loss. 7. Okay, how many trades have we done now? We're on 47. All right, let's speed it up a bit. Let's go 8 loss. And then we got a nice 3x win. A nice loss on 1%. 8. By the way, I've put all the formulas in so it all calculates automatically. But you can see on the right-hand side, right? Right now, we are 54 trades in. We're 54 trades in. And if you look at where the account is right now, it's 173% up. 173% up. That's like unheard of. Unheard of. So even if you can get above 10, 20% in a year, you're on another level. Now, if we scroll down to the bottom, at the moment, we're on, look at the numbers. Look how they're averaging out, right? Now that we've got a bigger sample size, we've got 40% win rate, 45% loss rate, and a 15% draw rate. We will tidy this up at the end when we'll just expand the numbers because it's slightly bigger numbers here. So we've got a 7. All right, so that's a loss. We've got another loss, 3. It's a nice win there, another 3. And we've got another loss, another 3. So it's a nice win, nice winning week there. 5, we've got a break even. We got another loss. We got a nice 3x win there. But look at it. Let's look at the accumulation on the side. Look, there's drawdowns and it goes up. So what does the casino do? The casino pays out to gamblers. It's fine because it knows ultimately it has a higher edge. And if it does a large enough volume of trades or bets, or it takes on bets, it's going to ultimately win. And that's what you need to see trading as. If you take enough trades with an edge, doesn't mean everyone's going to be a winner, and nor does it need to be. And if you expect it to be, you've already lost. All you need is a 30 to 40% win rate, and all of a sudden you can see the numbers here. And you can tweak these numbers. These are, we can argue if it's conservative or not conservative, but you can tweak these numbers to get more conservative, more aggressive. and then see what works with you. So we've got another win, another loss, another loss, a break even. We got a nice 1x win, and we'll take those 1x wins. We've got a nice 5x there, nice 5x. We got 1% loss, another loss, 2 losses in a row, 3 losses in a row, and then we got a nice 3x win, a nice 3x win, a nice 1x win. Now we got a nice 0.5 loss, a whole 1x, so it'll be a 2% loss of the total account size. But look, we're nearly at a 300% net return. That's, incredible, absolutely incredible. Again, it could be over. This could be over a 3-year period. It could be over a 12-month period. It could be over a 6-month period, depending on your trading volume and your trading style. But hopefully, you're getting the feel now, right? You're seeing the picture here. It's a probabilities game that we're talking about. It's another loss. We got a 1x win. We got a nice draw, break even. We like break even, getting risk free. We took a 1x loss there, a 1x win, a 1x win. That will cover some of our drawdowns. We're now at nearly 400%. Now, note, the way I've put this dashboard together is it's compounded. So now our account size is currently, it's 191,000, starting on 50,000. And we're risking 2% of the 191,000, not the 50,000. So it's cumulative, as in it's compounding, which is a very, very powerful. Einstein said it's the 8th wonder of the world. Okay, we've got a nice break even. We got a nice win here, 3x. We got our loss, part of the game. Nice 3x win, another 1x loss, another 1% loss, a nice 5x. These 5x's are coming. We'll take them all day long, Another 1% loss, another 3x, nice gain, another 1% loss, because 0.5% is half of the risk. Again, another 0.5%, a full allocation loss there. All right, that's 100 trades. So let's just zoom this out. I just want to clean this up a little bit. Let's just go to view. I just want to change this. I want to make this a bit bigger so we can fully, let's go. All right, here we go. I just want to make this a bit bigger there so we can see the full numbers. And then I'll just clean it up. All right, fabulous. All right, you ready to see the numbers? Let's scroll down and let's see our P&L, right? Let's just scroll it up like this. And let's just review and we'll wrap up. So we did 100 trades in this example. Bang on, 40% was winners, 47% were losers, and 13% were break even. Our starting account size was 50,000 in the simulation, whereas 2% per trade. And the ending account size is 233,000 in profit plus the 50,000. So that's a really, really healthy performance. Like if you did that even over a 4-year period, you'll be on another level. The total gain is nearly 500% net, right? 500% net, 466%. That's unreal, right? And what you can do with this calculator, the way I've put it together, is what you can do and say, all right, Jagir, I don't want these minus 0.5. Let's change those to minus 1s. Let's get a bit more conservative. What does the numbers look like in that case? This one, let's change these two to 2x, 2x, and a 4x, right? Rather than the current ones. So let's just do that. Let's just see how it changes the numbers. So let's just change this to a 2. Let's change this to a 2 and a 4. And then with this one, let's just change this to a minus 1. And we'll leave the other one as a half. Now, that will affect the numbers, right? But so you can simulate. So let's see what the numbers are. See, it dramatically affects the numbers. So we can see now, with this scenario, we're a bit more conservative in the middle and over here. A bit more aggressive on the loss side, as in losing more. All of a sudden, the percentages are the same, but the outcome is different. But still 230%, right? But the main thing I wanted to get across today is probabilities is the name of the game. You are the casino. You're either going to be a fantastic casino or you're going to be a crap casino. And a crap casino doesn't take every bet, doesn't get the edge in its favor, doesn't just play the game and the stats and the probability where the dealers are just dealing unemotionally, right? The gamblers are the emotional ones. And the casino is like, no, gamble, big win, yeah, great, big win, great, here's the money, big win, great, big loss, bam, pay it all back to the casino. And that's just the nature of the markets as well. So take advantage of the dashboard. It's the R15 trend identifier dashboard. You can create up to 20 different assets. There's a buy sell signal there as well. It's really just to identify the trend and always trade in that direction. And that by itself will increase the probability of you making money because the trend is your friend. Ride it until its end, until it reaches its bend. So I want to finish with a quote from my book because what did we do? We took 100 shots and we scored 40%. Right? That's very similar to basketball. If you look at the best of the best from 3-pointers, it's around a 35 to 43%. That's the best of the best, elite level, which means they're missing 60% of the time, and that's elite. And trading is no different. So on that note, let's read a nice quote from Michael Jordan, which will hopefully really resonate with you. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I failed over and over and over again in my life, and that is why I succeed. In the example, we had a 47% lose rate, right? 47%. 47 trades were losses, but it was 200 to 460% up net. The Vanguard is giving 7.1%. Savings account are giving less than 1%. Most places it's hard to get a 5% in a year. And now you have an opportunity to learn some really serious skills, but you have to get control over your emotions. You have to be stoic. You have to be just solid like a rock. And even if we saw examples where there was 5 losses in a row, but we took the next trade. 2 losses in a row, we took the next trade. Bam, and then we had a streak of wins, but we didn't change 2%. We didn't get overly aggressive. We didn't go, wow, we've won the last 5 trades. Let's now start risking more because we can make more money. We go, no, because these 5 trades, guess what? They're independent from the last 5, from the next one. The next one's independent from the next 5, and so on and so forth. So like, subscribe, hit the bell notification. This was a special one. Share it. Most people don't get probabilities. Maybe I got an advantage because I got a degree in mathematics and used to teach math. But it's simple, and keep it really simple. Name of the game is consistency. The trend is your friend. Ride it until its end, until it reaches its bend. And when you go your edge, you trade the edge. Next one, you trade it again with acceptable capital exposure and consistency.